Very, very good, everyone. Let's talk about Tesla, which has released its earnings report. And it's really a company that never has a bad time for those who believe in the good old long term, right? That kind of person who buys, goes to sleep on the couch, and after a few years comes back to see what happened. Tesla is one of those companies that really favors this type of person. Basically, we have here a very interesting result. In this video, we're going to analyze the results versus the current trend, and I really want you to get the most out of this content. All right, let me show you a bit of what was presented in this latest earnings report. So in the third quarter, a record revenue, everyone. Basically, the company's revenue exploded. But look, adjusted profit fell by 29% compared to the same quarter last year, okay? The company sold more, but earned less because margins are tighter. There have been big tariff hikes, competition from cheaper companies, all those things, right? In 2024, we had revenue of approximately 25 billion. And in 2025, it doesn't say exactly how much here, but there was an excellent increase of 11%. It was 28.5, if I'm not mistaken, billion, in the same period of 2024, 25. The margin was the most critical point, right? So the highlight among all the details presented was the most critical part, which was the operating margin, which was around 10.8% and dropped to 5. The company cut its operating margin in half, folks. Basically, that's a very, very, very relevant piece of information, okay? And on the other hand, there was a major expansion in the energy and storage business. Yes, they produce those energy sources, right? The solar tiles, chargers, and so on, batteries. And that remained. There was a big increase there, right, in the company's balance sheet, which meant their cash remained very robust, with 41 billion available to spend as they see fit. Isn't that wonderful? It's a good company, no doubt about it. When we look at a brief summary, it shows, right, that the company is still in X full expansion, but the margins, in fact, were the key point. But what really matters, right? Basically, when we look at someone who invested and just went to sleep on January 1st, 2020, they had a 1,497% profit up to now. The company skyrocketed in value over the last 5 years. Then after 2021, 83%, 2022, 14%, 2023, 370%, 2024, 75%, and in January 2025, only 8% so far this year. But obviously that's still more than double American A. All of them outperformed fixed income by a wide margin, right, folks? So here we really do have a company. But look how interesting this is. Those who started in 2022 now have less than those who started in 2023 or 2024. Why is that? Because the company went through a major correction, and up until 2021, look, those who started in 2000, they have less today than those who started in 2023 and 2024, relatively speaking, because the company went through a major correction, and this shows that those who didn't catch the ideal entry point, basically during this correction here, we have the there's the opportunity to get in at better moments than just sticking to the simple long term. And that's exactly what we're aiming to work on here, right? Identifying the best entry point for those who haven't entered yet, and for those who, like me, prefer to seize opportune moments, right? When we look at Tesla's outlook here, we see that from October to December 2024, there was a great opportunity with a 63% increase. At this current moment, are we facing another good opportunity? We are, but with a very high risk, right? It started to make a more bullish move, but it was already relatively expensive. So right now, Tesla is basically quite expensive. Here, look, around $440 is indeed considered expensive, okay? So basically, the ideal would be for it to go through a correction to get a better price adjustment. But we can see, right, when we look at that spreadsheet, this point here, look, from the 2020 explosion up to 2021, that just in this period, it already went up 800%. And then with this, oops, let's go, my friend. Sometimes TradeView likes to mess with us live. When we look up to the current moment, it's 1,200%. And when we take the peak, it's 1,378%. So this first leg here from 2020 to 2021 was the explosive factor. After that, it started to move within a range, really respecting the expensive and cheap levels. At this moment, yes, we have a relatively expensive stock here. Let's see how the market will digest this result in the coming weeks, which was positive, but margins dropped a lot, and understand how things will go from here. So would you buy today, Gustavo? I wouldn't buy today, no. Basically, I would wait calmly for a better moment. All right? God bless you all. Take care. Bye bye.